So Enzo is the founder and CEO of a business called Earnr, which I'm sure he will explain something about it. But it's a brilliant product that helps you keep your tax tidy. Enzo, I'm handing over to you now. Please share your slides, say a bit about yourself, your business, and give us your insights. Oh, and by the way, if you've got questions to ask folks, if you can put them on the chat, that's the best way to do it, and I'll make sure your questions get answered. If we can do it within the time, that's great. If we can't, we'll commit to get back to you afterwards. So all questions will be answered as best we can. So just put them in the chat. Anyway, Enzo, over to you.
Yeah, thank you, Pablo. Hi, everybody. My name is Enzo, and let me share my screen so you can see the slides. I'm going to spend the next 15 minutes to give you an overview of the two different ways you can set up and manage your small business, and that is either as a sole trader or as a limited company. If any of you have any specific questions you'd like me to cover in this presentation, just put them into the chat now, and I'll try to answer them while I go through each of the different slides. If I don't answer them during the presentation, again, like Pablo said, we're going to go through all of them at the end. So I want to make sure that you get everything out of this webinar that you were looking for. So to start off, let me give you a very small introduction of the company that I represent, which is Earnr. We are your bookkeeper, spreadsheet, and accountant combined. So what does that really mean? Well, we automate your tax return if you're a small business, but also give you the tools that you need to track and keep up with your financial progress. Today, I have picked kind of four main areas that I'm going to go through. So the first one is really highlighting what the difference is between being a sole trader or having a limited company, when you manage your small business. The second part is whether you are set up as one or the other, what does that mean when you manage your finances? And this is, again, based on some of the questions that we get a lot from our customers. The third area that I'm going to focus on is what are your obligations to the taxman, again, depending on whether you're a sole trader or a limited company. And finally, dive a little bit deeper into how do you do a tax return when you've decided to do one or the other. So hopefully it's everybody's favorite topic. We know that there's a lot of stress that is involved with tax. No need to worry. We, again, like I said, hope to go through everything in this presentation. So to start off, again, there are two main ways you can manage your business. One is being self-employed or a sole trader, and the other one is a limited company. Now, there are benefits and downsides to either. There is no perfect answer to say, like, you need to go set up a limited company or you need to do it as self-employed. But overall, what we recommend for smaller businesses is to start out with self-employed and then move to a limited company when you hit a specific size. I think this will start to make sense as I go through each of the different steps of explaining what it means to be one or the other and your responsibilities that link with that. So starting as a sole trader. So when you are a sole trader or self-employed, your business is the same as who you are. Now, contrary to popular belief, you don't automatically become a sole trader by doing self-employed work. You need to register yourself in the UK, and how you do that is directly with HMRC to be recognized as being self-employed. A limited company is slightly different. So a limited company is an independent legal entity that represents your business. It provides a separation between your personal and your business affairs. So to try and dive a little bit deeper in what that exactly means. So a limited company is completely separated from your financial life, your tax life. It's almost like it's a separate person that represents your business. Well, if you're a sole trader, everything is linked to you as a person. Now, what are some of the benefits and drawbacks of each one? So if you're self-employed, it often means that you have a lot less admin because of the simplified tax and reporting requirements that come with being self-employed. And it's a lot easier and cheaper to set up. So in the UK, you can set up a self-employed directly with HMRC, and it's completely free. Now, the disadvantages that come with being self-employed is that you are personally liable for the work that you do. So any legal challenge is against you rather than a protective shell that is a limited company. And the second disadvantage of being self-employed is that there isn't as much flexibility to optimize your tax bill. But again, I'll go through a little bit more detail of that. Now, these disadvantages sound quite scary, but the potential impact that we see with most people is quite limited. So unless you've taken out a loan for your business, the likelihood of you having any personal liability is quite small. Again, this does change a little bit depending on what kind of small business you have. So example, if you make food as part of your business, then you have some liability associated with that. Now, if you're worried about those things, you can take out personal insurance. So it's called professional indemnity insurance to limit your personal liability and protect you from any legal challenges. So for example, if somebody gets, again, to talk about somebody makes food, if somebody gets food poisoning, a way of protecting yourself is having insurance in case you have any legal challenges against you. On the other side, we have a limited company. So one of the major benefits is that it provides personal protection from, let's say, bankruptcy or legal disputes because it is a separate legal entity. The second thing is that you also have a lot more control over how to optimize your potential tax bill. Now, the disadvantage of having a limited company is that it's a lot more expensive to set up and to manage over time. There's a lot more admin, which often means you may have to pay for an accountant or a lawyer and incur a lot more costs. Now, again, there are a lot of benefits with this, but our recommendation is normally to set up a limited company when your business has been set up and you actually have some revenue already going through. So from all the accountants that we work with, their general recommendation is to set up a limited company when you have more than £40,000 in revenue a year. The reason why, if you earn less, one of the benefits around this tax optimization is really limited. There's only so much you can do. And again, the cost that you'll likely incur of having a limited company is a lot higher. So setting up a limited company in the UK doesn't cost a lot. So you can often do it for less than £100, but also with some business bank accounts, you even get your limited company for free. And it takes up to 1 day to set it up. Now, maybe to go a little bit more, again, to bring it to life of what this, Enzo, when you say limited company has a lot more admin, like what does it exactly mean? So if you set up a limited company, you have certain responsibilities that come with that. And a lot of that is linked to reporting. So the 3 reports that you need to do when you have a limited company are prepare a balance sheet, prepare a profit and loss statement, and also prepare a notes to your accounts. I'm going to give a very brief overview of what these 3 documents are. Again, if you're self-employed, you don't actually have to do this. If you are a limited company, you do because there is that legal separation and you have to report on that. So a balance sheet is a snapshot of a company's assets and liabilities. It's taken at a specific date. So your assets are, for example, tools you've bought, cash you've earned, if your brand is worth something, any money that you're owed, those are all assets. And your liabilities are things like loans, taxes you owe, or any shares that you have in your business. A profit and loss statement represents your income and outgoings for a specific period of time. So it covers the profit that you've earned and is a report that you need to do annually. So for, again, small businesses, this is any income you've earned from giving your services or selling your goods. But it can also, like, let's say you have merchandise, it will also include that. And expenses are things like courses that you may have done, your internet costs, subscriptions, anything that is necessary to run your business. The last document, which is a notes of accounts, is generally a written supplemental document that explains some of the rules that you've applied to preparing your balance sheet and your profit and loss statement. It's often the most complicated part and where a lot of people get confused because there's not a clear set of rules and on what should and should not be included. So again, what we see is preparing these documents is quite a hassle, and many people have set up a limited company either need to pay for expensive software or work with an accountant to do it. Now, in the rest of the content I'm going to cover, I'm going to talk about what does it mean when you're self-employed and what does it mean when you've set up a limited company to, again, bring it a bit more to life. So first one, very important, how do you pay yourself when you're self-employed? So if you're registered as a sole trader, there's no separation between you and your business. So this means that any profit you've made, you can take out of your business immediately. So you can use this income for personal use. Now, it's still important to put some money aside for your eventual tax bill, but you don't have to really stress too much about keeping certain money aside because of the requirements allowed with it. Now, if you operate as a limited company, any revenue and profit that you make belongs to the business you set up. So again, it's that separate legal entity you set up. Now, you can employ yourself as part of that business, and you can pay yourself a salary, or you can give yourself something that is called a dividend, but that is still separate. Something important as well with limited company is you have to have a separate and dedicated bank account for your business as well. Now, regardless of the approach, we always suggest setting yourself something like a monthly salary, even if you are not employed. This kind of mimics what it feels like when you're employed, and make sure that you don't take out too much or too little out of your business unintentionally, and keep enough money aside for your eventual tax bill. So setting money aside for tax, how does that work? So when you're self-employed, the best way to prepare for your tax bill is to set aside a certain percentage of your income. Even better if you can put this money in, let's say, a bank account that earns you a little bit of interest, so that you get some benefit of having put that money aside. If you're a limited company, you also need that money aside, but it's slightly more complicated how to calculate your tax bill. And I'll show that when we go slightly later on in the presentation, where I dive into what are the different types of tax you need to consider. Now, generally, a great way to put money aside is just to open a digital bank account that allows you to create pots, and putting them into these pots creates this mental separation that you have and reduces the risk of not having saved enough money for the taxman. Next thing is, what should you track or managing your payments? So having some form of Excel sheets, a notebook, or an app to track your ingoings and outgoings will help you with any reporting that you need to do. Again, if you're a limited company, for example, your profit and loss statement, or if you're self-employed, your eventual tax return. So that's quite similar. So that brings me to tax, and what does it mean? So every country has a slightly different tax system. In the UK, everything is managed by HMRC. And there are 3 types of tax that you need to consider. The first one is income tax. Second one is VAT, or value-added tax. And the third one is corporation tax. So income tax in the UK is split up into 2 parts. It's national insurance and income tax. And they are calculated in slightly different ways and have slightly different thresholds. So national insurance, if you earn over a specific amount, is a certain percentage that you pay of the amount of money you earn. Income tax is also, again, a different threshold that you pay a certain percentage of, but it comes into bands, how it's calculated. So as an example, in the UK, if you earn, let's say £50,000, on your first £12,500, you pay no tax. That is your tax-free allowance. Then on anything you earn between £12,500 and £50,000, you pay 20% of everything you earn. Now, if you then earn anything above that, so let's say anything you earn between 50 and let's say you earn £80,000, so anything that £30,000 above is taxed at 40%. So it's a sliding scale. It's almost the more you earn, anything additional gets taxed at a higher tax rate. Now, the highest tax band in the UK is when you earn over £150,000, and then you pay 45%. So every pound you earn over £150,000, and if only we were all so lucky that we earn that much money, you'll pay 45p to HMRC. And again, it's very important to understand this is income tax. So you're also still paying national insurance on top of that as well, which is another type of tax. Income tax, again, is related to your personal tax return. So a limited company does not pay income tax. Now, VAT is a tax charged on the services and the goods that you sell. It's very important to understand, and it sometimes gets a little bit complicated as well. So in the UK, you don't need to worry about VAT if you earn less than £85,000 a year. Under that threshold, it is completely voluntary to register for VAT. Now, if you're registered for VAT, you need to submit a VAT return in the UK that is done quarterly. So again, this is additional admin and paperwork that you'll need to do every quarter. The great thing about VAT is that you can claim back some of the VAT that you've paid if you're VAT registered. So as an example, let's say you buy some software, around 20% of that is likely VAT. So if your software is £10 a month, around £2 a month of that is VAT. You can claim that back from HMRC and reduce your VAT bill if you have one. So again, if you sell something, you need to put the 20% VAT on top of that. And it also depends a little bit on your business. There's different VAT rates depending on what kind of business you have. So we normally recommend avoiding registering for VAT unless you have to do so.
Can I just jump in, Enzo? You've mentioned HMRC a couple of times. Probably most people know who that is, but can you just explain that term HMRC?
Yeah, of course. So HMRC stands for Her Majesty's Revenue and Customs, and they are the government entity that manage everything in relation to tax, national insurance. They often also manage, if you have a student loan, making sure that you pay that right amount, and yeah, commonly known as the taxman.
They're not all men, are they?
No, they're not.
Okay.
No, they're a very diverse organization. And I think as well, if you compare HMRC to a lot of other countries, they're very, I would say, innovative organization compared to a lot of other countries. So for example, it is a lot easier to do a tax return here online than, for example, in countries like France or Germany or even the US, where a lot of stuff is still paper-based. Cool. The last form of tax is called corporation tax. In the UK, you only need to pay corporation tax if you set up a limited company. If you're a sole trader, you do not need to worry about it. Corporation tax is also typically calculated as a percentage of the profit generated by your business and is billed periodically. Now, I've covered a lot of like complicated tax terms. I can understand that it's probably a lot very overwhelming, but just to summarize in what you need to remember and which ones you don't. Income tax is something you need to pay if you have a limited company or if you're a sole trader. It is calculated on the income you pay yourself. And there are specific thresholds in that. VAT, you only need to think about if you earn more than £85,000 or if you have voluntarily registered for it. That is true if you're a limited company or if you're a sole trader. Corporation tax is only something you need to worry about if you set up a limited company. If you have not set up a limited company, you don't need to worry about it. Great.
Enzo, that's really clear. And 2 people have jumped in to say how clearly you're explaining it. So thank you. 3 people. So
thank you.
You're getting a fan base here. So there's one question or 2 questions from Dan. You may be covering this later. One was if you're just starting out as a sole trader, is it worth getting an accountant? I don't know if you'll cover that. And his other question is, can you claim back VAT on things like laptops and software if you are a sole trader?
Yes. So VAT, you can be registered as a sole trader or as a limited company. Again, you really need to consider whether it's worth the hassle if you've earned less than £85,000 on claiming back that VAT. Because once you're VAT registered, you also need to add VAT to your services. So again, as an example, let's say you sell something for £100. If you're not VAT registered, then you can keep that £100 to yourself, and that is pure revenue. Now, if you are VAT registered, and the common VAT threshold in the UK is 20%, then you only get £80 of that £100. £20 of that £100 will need to be paid to HMRC. So you basically make less money. Now, the great thing is, let's say you've bought a laptop, right, in the example, and you've paid around £1,000 for that, so £200 of VAT, then you can offset that. So you get a little bit of that money back. So what you normally see is when people start claiming VAT, that their prices increase. So it's also something it has a lot of implications of how you price. You become less competitive to somebody that has not registered VAT in terms of the pricing you can set. So you really want to think about, is it worth it? And am I going to get the benefit out of it? Because a big mistake that we see people make is, I'm VAT registered, I'm going to get money back. This is amazing. But that's not necessarily how this works. And again, something also I want to clarify here in terms of income tax. In the UK, if you're self-employed, you don't need to do a tax return if you have less than £1,000 of revenue. So again, this is not profit, this is revenue. So if you've done £1,000 or £1,500 worth of sales, then you need to do a tax return. If you've done less than £1,000, you don't need to do a tax return, which is really helpful if you're just starting out and don't really want to worry about all the pain that comes with doing your tax return. All right, so what to do if you don't want to do your income tax return, or how do you do one? So in the UK, there's generally 3 ways that you can do your tax return. The first one is you can go to an accountant. An accountant will generally charge you, depending on how complicated your business is, anywhere between £200 to £400. You can do it yourself directly with HMRC. That is completely free. Or you can use an app like ourselves, or there's a service, something called Tax Scouts that do it for £150. That will, I think, are kind of sit between doing it completely yourself and kind of going through the expertise that is an accountant. Again, there's benefits to either. It's really, I think the more complicated your business becomes, the more you earn, the more value you can get out of paying for an accountant to help you with your tax liabilities. So actually, before I go into this, some last things that I would like you to consider when you think about what I want to do as sole trader, what I want to do with taxes, is you can expense more than you think. So make sure you expense everything you purchase for your business. And again, just to be really clear, you expense for your business, not for your personal use. So if you use your internet or your electricity at home because you work from home, you can expense part of that as part of your business. The second thing is something to really think about is having that separate bank account for your business is really useful to keeping accounts separate. But do keep in mind that opening a new bank account will affect your credit score and may have a little bit of effort. And the last thing, and this is more about the different accounting systems. So in the UK, you can use something called cash-based accounting, which is a much simpler and effective way to stay on top of your finances. So in the UK, you have two systems, cash-based and accruals accounting. A lot of people start with accruals. It's very complicated. We normally just say cash-based accounting, which is really easy because all you need to do is if money comes in or if money comes out, then that's how you manage it. So to summarize, the four key things that I hope that you've learned a little bit about is now that you understand the difference between managing your business as a sole trader or as a limited company, and some of the reporting and the benefits that come with doing one or the other. Understanding the different types of tax you will likely have to deal with as part of running your small business, and also understand the additional responsibilities that come with it. I think that kind of concludes my main presentation. I'd love to go through any questions that you may have, and it can be anything.
Okay. Enzo, thank you very much. That was super clear, and lots of people have appreciated that, the clarity. So there's a question from Alice, and I think just to clarify, because there are lots of different thresholds for different taxes. Yeah. I think I know the answer, but I think you'd better answer this one. So her question is, do you not need to register for VAT or as a business until you earn £12,500, or is it something else?
Yeah, this is slightly different. So for VAT, the threshold is £85,000 in revenue in a year. I think something important to consider that a lot of people don't realize as well is that if you think that you're going to hit £85,000 or more in a year, even before you've actually earned it. So let's say you're 6 months in the year, you've earned around £60,000. If you are confident that you're going to hit more than £85,000 in sales, then you need to register as soon as possible. It's a requirement that HMRC sees. Like, people in the past have given the excuse to say, well, I didn't know I was going to do this many sales. Like, it's great that I'm this effective and my business is doing so well. But if you think that you're going to hit it, you need to register as soon as possible. The £12,500 threshold that you were mentioning is linked to income tax.
Okay. And you mentioned £1,000 as well. What's that one?
Yeah. So £1,000 is the amount of income, and it's a threshold if you earn more than £1,000 and you're self-employed that you need to do a tax return in the UK. So something that I haven't really gone into that much is like most people in the UK don't have to do a tax return, which is really nice. Now, unfortunately, as soon as you start earning a little bit of money through self-employment, HMRC wants to know about it because they have no easy way to track it. And the way for them to understand how much you've earned is you doing a tax return. Doing a tax return doesn't necessarily mean that you're going to be paying taxes, because that's, again, linked to different thresholds. But if you earn more than £1,000, HMRC would like to know about it.
Okay, thank you. So that's really clear. So the £1,000 is the point at which you have to declare your income to HMRC. £12,500 is the point at which you start paying income tax.
Yeah.
And £85,000 is when you have to register for VAT. But I think you said you can register if you're below that.
Yeah, exactly.
Normally it's not worth it, but you've got to do the maths.
Exactly.
Okay. And a question on the £1,000 is, or two questions, is it monthly or for the year? And is it after or before expenses?
Yeah, so the £1,000 is before taking off expenses. So it's your revenue, sales, the different terms that how people would describe it. And the £1,000 is yearly, not monthly. So it feels like quite a low threshold. And it kind of catches some people out, because sometimes we have our customers that say like, well, I haven't even made any money off of my business. Like my expenses are way higher. But unfortunately, like, yeah, it's £1,000 in sales or revenue. You could be making a loss. I do want to note though, is there are benefits to telling HMRC that you've made a loss. So if you've made a loss in 1 year, you can offset that against future years and optimize your tax bill linked to that.
Okay. So that's a really good insight, because earning between 1,000 and 12,500 is kind of odd that you have to declare it, but you're not paying any tax. But actually, it's a good idea to do that. In fact, it's an obligation to do that. Yeah.
Exactly. Again, you don't pay any income tax, but you might need to pay national insurance, because those have slightly different thresholds. It gets a little bit complicated because you have different types of national insurance and slightly different thresholds. So just to keep things simple, I won't go into too much detail, but yeah, you might still have to pay tax even if you earn less than £12,500.
Yeah. Okay. No, that's clear. And just another follow-up question from Kay. So if so you tell them how much you've earned and what your expenses are, but the tax is calculated after expenses. Is that right?
Correct. Yeah,
okay.
It's based on your profit.
Okay, thank you. So now we have a more complex question here. I think there will be a few people in this situation. So there's somebody who is part employed by a company.
Yeah.
And that tax is dealt with through PAYE.
Yeah.
And part of the time self-employed.
Yeah.
So if I'm in that situation, when I'm doing my tax return, am I just talking about the self-employed work I do, or do I need to talk about the salaried work that I do as well in my tax return?
Yeah. So your tax return is basically you writing a small summary of everything you've earned, even though you may have already paid tax on it. So you need to include your employment income, your self-employment income, any other income like dividends or interest, and there's then a long list of other things you can or may include in that. So if you're employed as well as self-employed, you need to include both. And the main reason for that is that's linked to how HMRC calculates how much tax you need to pay. And it's linked to those tax bands again. So as an example, let's say you earn around £15,000 in your employment. You pay a little bit of tax on that, right? Because you're in that first tax band. And then you have another £2,000 in profit that gets paid on top of your employment income. So in this scenario, you're in the 20% tax band. That's how much your self-employed income gets taxed.
Okay, so you have to put both in, including the information your employer gives you for PAYE. Okay.
Exactly, and just to keep it simple as well, like you at the end of the tax year, your employer will give you a document called a P60. It's like this orange document that kind of has an overview that will have all the information that you need to put in your tax return. So they try and keep it as simple as possible.
Thank you. Okay. And just another question about the £1,000 threshold. So if you don't reach £1,000 of revenue in a year, but you're going to go over the 1,000 the following year, do you have to register the first one or not? Do you see what I mean? So I guess, you know, if I get £500 in this year and then £800 the next year, what are my obligations?
The £1,000 kind of resets every year.
Okay.
So it's not cumulative. And just to make things a little bit more complicated, how HMRC calculates it, they don't work from January to December. They work from April to April. So April 6th to April 5th. Those are the dates you want to start adding up how much you've earned.
Okay, so that £1,000 threshold is reset every year.
Yeah.
And just to follow up to that, so if I earn less than 1,000, if I earn say £500, but my expenses are higher than that, so I'm actually making a loss, can I declare that even though I don't have to? Is that a helpful thing to do?
Yes, you can, and it is helpful if you first of all have kept track of everything, because that's really important. So all your expenses, and made sure that those expenses are allowable. And HMRC has quite a lot of information about this, helping you understand whether you can expense something or not, because you can offset it in a future year if you've made a profit.
Great. And you mentioned earlier on that okay, there's a question I'm going to come back to. You mentioned earlier on that you should be, if you're working from home.
Yeah.
And I see a few people we can see, maybe we're at home, but we're working, and you know, and you can claim some of the costs of your Wi-Fi, your heating. You know, big issue right now is going to be a bigger number. So how much of that can I claim back for my business as an expense?
Yeah, so there's two ways of doing it. One is something called simplified expenses, simplified work from home expenses, and the other one is kind of a portional method. So with simplified working from home expenses, HMRC allows you to give an estimate of how many hours you work from home in a month, and then you can charge like around, I think it's a couple pounds a day. If you work like close to full time a month or even part time, then it's around like £300 that you can claim as an expense. You don't have to actually keep all your receipts for everything, so it's quite a nice way of doing it. Another way is that you can calculate in a slightly more complicated way of how much you use your home for your business and get basically a percentage, and then multiply the percentage with your expenses. So as an example, let's say you have you live in a 2-bed apartment, and in that apartment you have one room that you just use for work. You use around 8 hours in a day. Then you could do a kind of a complicated calculation that says, okay, around 10% of my costs are linked to my business because that's how often I use that room. And then you can multiply that to your electricity bill, your gas bill, your internet, and such.
Okay. And so somebody's asked a question about a point made earlier about income tax for limited companies. Could you expand on that? Can you say something about that? Yeah.
Yeah, I haven't gone into too much detail, but maybe just to bring it to life and go through an example. So let's say you have a limited company and you're a director of that limited company and you pay yourself to that. So if your limited company has made a profit, you pay corporation tax. So that's the first tax you need to pay if you've made a profit. Now, people try to optimize that sometimes by making sure that their company doesn't make too much of a profit. So for example, you pay yourself a nice salary and it kind of evens out. Now, if you pay yourself a salary, then you pay income tax on that. So you still pay national insurance and income tax. But as a director of your company, you can also pay yourself through dividends. And dividends have a slightly different, again, these bands that I keep on talking about, they have a slightly different band structure. So there are ways that people optimize this and calculate how much tax they pay by either paying them dividends or salaries. That's kind of how limited companies could work. Again, it's quite complicated. This is something that is best to be discussed with an accountant. But just to bring it again to life a little bit more.
Thank you. Yeah. And so I'm getting a sense that as soon as you kind of start getting into limited company territory, you're probably going to need an accountant supporting you. You know, we'll come back to what Earnr can do in a minute. I want to explore that, but
Sure.
But that's kind of how it feels to me from what you've said there. So look, we've got somebody here who is what we call test trading. So they're checking out their market, they're running up expenditure, they may not be getting many, if any, sales. So it's really essentially just costs. Yeah. Should they keep a track of their expenses while they're test trading?
Yes, 100%. Keep a track of your expenses. Again, right now you're just at the start of the tax year. So who knows where you're going to be in like 6 to 8 months time when the tax year ends in April. Make sure you keep all your receipts and have a just general understanding of why you did that. My recommendation is you can use our app. It's free to use. You can kind of keep track of all your expenses. We can also tell you when you've hit the threshold, when you have to do a tax return if you're self-employed. So that's an easy way just to make sure that you are prepared if you decide to do that tax return.
Okay. So I'm going to push you on there. I know there are a couple of more questions coming. So you've mentioned Earnr a couple of times, and we know this is your business, so it's okay to tell us about it. If I'm starting my business, I'm a sort of small business, maybe I'm still at the stage of test trading. How much are you gonna? I'm gonna say it bluntly. How much are you going to charge me to join Earnr to help me with my tax affairs? How does that work?
Yeah, so you can download Earnr for free. And you can use it for bookkeeping. Now, again, bookkeeping is a term that a lot of people use, but bookkeeping is basically keeping track of your income and your expenses and your receipts. How we've built the app is that you can either connect your bank account to it and kind of select which of your payments are related to your business, or you can enter them all in manually. If you earn below £3,000 through self-employment, we can help you with your tax return for free. So we submit that directly to HMRC on your behalf. We ask you a couple of questions. If you earn more than £3,000 through self-employment, then we charge £99 for that.
Okay. So 3,000, that's another threshold. 3,000 below that, you don't charge. Above that, it's all about thresholds today. Yeah. No, that's good.
Exactly. Again, when we started out Earnr, like we really wanted to help, especially people that are just starting out in their business, and doing your first tax return can be really stressful, like not really understanding what needs to be filled in, what information you need. And we generally see that most people make less than £3,000 in their first year. So that's why we've used that threshold.
Good. No, and we really appreciate that. So I've put the Earnr website on the chat.
Thank you.
Earnr without the second e.co.uk. It's there in the chat. And somebody missed a test trading answer. The answer was yes. Keep your receipts. Okay. So here's a more subtle question. So here's somebody who has had a period where they are in employment. And so they are, in some kind of tax band for that, but their self-employment in that tax year was less than £1,000. Do they need to do a tax return because they've got employment income, but self-employment income is below 1,000? Does that mean they have to do a tax return or not?
In the UK, when you're only employed, you do not need to do a tax return unless you earn over like £100,000 or HMRC sent you a letter. It's quite difficult to really say whether you need to do a tax return or not, because it really depends on your personal situation. Now, if you earn self-employed income and you've earned less than £1,000, you do still, there's no reason for you to do a tax return yet, if for that self-employment. Again, there may be other reasons why you may need to do a tax return that it's very difficult for me to say like yes or no. But if you earn less than £1,000 in self-employment, HMRC will not force you for that reason to do your tax return.
Okay, so Dominic, I hope that answers your question. Good. And you've mentioned a couple of times that there's information on the HMRC website. How easy is that to, for things like, claiming simplified home expenses, for example? You took us through that. Is that the kind of thing I would find on the HMRC site, or is it all gobbledygook that I won't understand?
It is there, but I do agree it's maybe a bit hard to find sometimes and a little bit complicated. You have online certain calculators you can use to calculate your simplified work from home expenses, or your kind of tax liability. So Google is your friend here. What we also do at Earnr, we write like small little guides. So if you're a copywriter, or if you have like a cake business, so I would also recommend just having a look at our blog. And if it's not there, message us and we'll make sure that we write something about it.
All right. So I don't have to be a subscriber to Earnr to access your blogs and guides?
Correct. All the blogs are free. Something we also do in Earnr, which is something that we started doing a lot more recently, is having like really short videos explaining key concepts about tax that you can find directly in the app. Again, the app is free, so you can just download it and have a look at those videos. We explain things like what's a tax year, what is a UTR number, which is also a term you probably will not have heard unless you start registering for being self-employed. And yeah, it's just really brief 1-minute videos that explain that in a simple way.
Great. Great. Well, if today's anything to go by, I think there'll be really good videos. So I really recommend that. Thank you, Enzo. So I think we've answered all the questions. Are there any other questions that anyone wanted to put forward in the chat before we draw things to a close? I think that's it. Okay. So I think it just then remains for, first of all, I'd like to thank everyone who's attended today. We've had a great attendance. Thank you. Some of you we've seen a few times. I hope that you find these webinars helpful, but thank you for giving your time to listen and to share your questions particularly. A big thank you to Anna, who makes all this happen. So she works very hard behind the scenes to make sure we all turn up and we're all here, and people like me sort of turn up on time. Enzo's much better at that than me, and a special thanks obviously to Enzo, who's really, we know this can be an intimidating area in tax, and yes, there are some complexities where and before so no, there's one more question. Someone snuck in with another question. I was nearly there and I nearly got there. There is let me come back to it. So someone has filed self-assessment every year, even though they have not had £1,000 of revenue, but they are reporting their expenses. And I think you were saying that's a good idea because that builds up your history. So if you make profits in the future, there's a way you can claim at least some of that back.
Exactly.
But the question is, I've been doing it every year. I still haven't made a profit. I still haven't hit the 1,000 threshold. I still haven't made a profit as well. Can I choose not to fill it in 1 year because I'm just, I don't want to bother this year? Or having declared I'm a sole trader, do I have to keep going once I've started?
So as long as HMRC thinks you're self-employed or you've registered as self-employed, they're going to expect you to submit a tax return each year. If you don't do one for 1 year, then they're going to send you a fine unless you tell them that you're no longer self-employed. So to summarize, once you start, you kind of have to keep on going.
You have to keep going. Yeah. But you can, as you say, you can declare to them, look, no, I've really stopped, and then that's okay. But
exactly. But then to
yeah.
HMRC, you are no longer self-employed, and they kind of end it.
Yeah. Okay.
But like I said, like if you use something like Earnr and you earn less than £1,000,
everything seems just fine. Okay, tomorrow morning I got to pay. God.
Oh, so we're enjoying somebody's call there. Okay, no, they've got it. Okay.
Sorry, but
Yeah.
like I mentioned, we can help you with your tax return and try and make it as easy as possible. It doesn't take a lot of time.
Yeah. Okay. Enzo, huge thanks. That was super clear. That's the best explanation I've ever heard of a big complex subject. And just say we've recorded this, so we will share the recording out in a few days, so you can go back and look at what you've seen, and that will include the sides that Enzo has kindly shown. If you're interested in looking at the Earnr website, it sounds like some really useful free resources on there. Do have a look at that. And if your business builds up, then if you're earning over £3,000, yes, there is a charge. Up to that point, there isn't. So, we do recommend that you have a look at that as one of the options for making sure that you stay legal, pay the right amount of tax, but don't pay too much either. So, Enzo, thank you very much. Thank you all for joining today. Everybody, have a great evening.
Thank you. Bye-bye.
Thank you, everyone.